Hey, hey, hey. Hey, Facebook Nation. Welcome to another broadcast tonight as we talk about all things finances with our very special show, Ask the Experts. But please don't go anywhere because we are going to be right back. Welcome back to Ask the Expert on the Joan Henry Show. I'm your host, of course, Jamaican Joan, and I'm super excited to present this program again. As you may or may not know, this program is aired once a month, which is the second Monday of every month. So, here with me today are some experts in their fields, and it all connect to financial literacy to some degree, but I know that you are going to enjoy this program tonight. So one of my on-screen guests tonight is Mr. Leroy Mckenzie Jr., who's going to be talking to you about credit. Then we have Miss Lillian Middleton, who is a residential mortgage consultant. Our other collab partner is not here with us at the moment. Stacey McLennan with Prime Real Estate, and she's a real estate investor as well. And so she may join us, she may not, but either way, it's four of us. We host this program once a month, which again is the second Monday of the month. And of course, Jamaican Joan, your business strategist, specialize in wholesaling, property management, and financial literacy. So thank you guys who have tuned in, whether you're watching on Facebook or in YouTube. Thank you so much for checking out our program tonight. So let's get the program started with Mr. Leroy Mckenzie Jr. Won't you share with the viewers a little bit about yourself?
Sure. Good evening, everyone. My name is Leroy Mckenzie Jr. I am the president and CEO of J&F Enterprises, which is a distribution, publishing, and business consulting firm located here in Baltimore, Maryland. And what we do is we actually assist individuals and entrepreneurs or aspiring entrepreneurs to bring their vision to reality. And we do that in a couple of different ways. We do that through our book publishing consulting services. We do it through our business consulting services, where we assist the entrepreneur or aspiring entrepreneur how to be able to start their business, grow their business from a marketing and branding perspective. And then we also offer what we have are motivational and Christian-based apparel.
Okay, awesome. So Miss Lillian, I was about to say McLennan, Miss Lillian Middleton. Let me get
Good
the name
evening,
right.
everyone. Thank
How
you,
are
Joy.
you?
I am fine. Thank you for inviting me again. And Leroy, good to see you again. I'm also
Absolutely.
excited to be attending this session. And my name is Lillian Middleton. I'm with a company called Fidelity Direct Mortgage. My office is located in Annapolis, Maryland. And I also say that my office is wherever my client is. As a mortgage consultant, my role is to assist you with identifying your personal goal, and my role is to assist you with financing, with purchasing, renovating, refinancing homes in the DMV area. I also assist with evaluating what type of strategy, once you enter into a loan program, in terms of long-term planning, short-term planning, I offer options, and we discuss all details of the transaction.
Okay, awesome. And so my company is Out in the Fields Real Estate Consulting Firm, where we specialize in wholesaling, property management. We have a cleaning component where we clean for pre-sale or pre-rental. We have a gifting umbrella as well, where we offer gifts to the real estate agents can offer those gifts at closing to their new home buyer. And we also have a section that deals with financial literacy. So while I still have you on the screen, Miss Lillian, you have an event that's coming up. Do you want to tell the viewers about it early on in the show, so we make sure that they know about this amazing event that's coming up?
Absolutely. So, we will be having a virtual home buyers seminar. It will be on April the 3rd from 11 o'clock to 12:15, and we're certainly hoping that you can join us. During this home buyer seminar, we're going to present all of the steps that are necessary to become a homeowner. We're going to discuss the options for homeownership. We're going to discuss how to get started with the process, the benefits of being a homeowner. We are also going to just have Joan join us as a motivational speaker, and her focus is going to be on mindset. We will have a feature also for credit, but we're actually going to help you with the path, determine the path for you to be a homeowner. And we're real excited about it. So please join us on April the 3rd. It's for an hour, for 15 minutes. We're going to have questions. We're going to have fun. And we're looking forward to you joining us.
Okay, awesome. And so if that information is on my main Facebook page, and it is also in the We Global community. So up on over to the Facebook pages and register to attend this seminar. So to kick things off tonight with what we're going to be sharing with you tonight, I'll start by sharing some tips, some basic tips on budgeting. So the first thing, creating and maintaining a budget is one of the most basic aspects of staying on top of your finances. Without following a budget, it is difficult to track where your money is going. And we all know, if you don't know where your money is going, it's going to be hard for you to budget. It's going to be hard for you to save anything. So creating a budget so that you know where your money is going is crucial. It is very important. Point number 2, once you have an idea of what you spend in a month, you can begin to track your expenses into a worksheet budget, okay? Your budget should outline how your expenses measure up to your income, so you can plan your spending and avoid overspending. That happens to most of us because we do not have a budget. We don't have like one of those budget sheets that we use to document our income so that we can, avoid overspending. If it's not documented, we may lose track of how much we have in the bank because, we did not go check the bank account to see how much is there before we spend. So if you can create like a budget sheet where you can have it, at a glance, at your fingertip, where you don't have to worry about logging in to find that information, but create a budget. This way you will know, again, how much you're bringing in, so you know how much you can afford to put out, because until you do that, it's going to be hard to save anything. And then point number 3, if your expenses are so high that you cannot save as much as you would like, it might be time to cut back. So identify those non-essentials and cut back on those, right? It may be simple as fewer cups of coffee. It may be fewer times eating out, one less vacation for the month. But if you're trying to achieve something, you may have to cut back. I mean, you're not going to cut back. I wouldn't suggest food because that's very essential. You got to eat. But let me say this. Cooking at home might be one of those things because it's more than likely going to cost you a whole lot less to cook at home versus going out to the restaurant. So you got to find some of these things that you can cut back on in order to save your money, okay? Point number 4, one of the best ways to save money is to set a goal, right? Start by thinking of what you might want to save. Perhaps you're trying to purchase a home, maybe a vehicle, you may be saving for your retirement. And then you figure out how much money you would need to save and set that amount aside. Again, goal setting and financial literacy is very important, because if you don't have a goal, something that you could look at, something that's you're working towards, then it's going to be a long road to achieving whatever it is that you're trying to achieve, because depending on what purchase you're trying to make also determines how much you want to save. So you got to first set that goal. If I'm trying to buy a house, how much do I need to put aside? Do I need to even maybe find a second job, or whatever the case may be? Having that goal, that written goal, because I want to be clear, it's not just having the goal in your head, having a written goal, okay? Something that you can look at, you can analyze, you can see it. Because sometimes we keep things in our memory, and then all we need is one thing to come up, and then we forget all about that goal we have in our mind. So we need to write them down, okay? And the last point for now would be, make sure that your financial goals are smart. And what do I mean by that? That means the goals are specific, they are measurable, they're achievable, they're realistic, and they are timely. Now, if you're planning to buy a house, let me just pitch my tent on a house here. If you're trying to buy a house, you got to be specific, okay? If you're trying to buy a home, is it a single family home? Is it whatever? Because all these homes come with different prices, right? So you may want to be specific of what kind of home are you looking to buy, and be specific so that you can kind of gauge your money as to, what you're trying to achieve. Be specific. You got to make sure that your credit is in line with the kind of house you're looking for, which I'm sure Mr. Leroy will talk about some more. Make sure your goals are measurable. If we're buying a house, it's not something that we could just get up one day and said, you know what? Well, not for the most of us, at least. I'm going to buy a house this afternoon. That takes planning. So you need to set a measurable time. My goal is to purchase a house by April 2022. See, that's how you set your goals to be measurable. You put a time frame on it, and then you work towards it. Make sure it's achievable. If your income is not the kind of income that could pay for a mortgage and everything else, you need to either get, like I said earlier, get a second job, or just cut back on some of the things that you spend on. Make sure that your goal is realistic. Do not look at a 600,000 house if you're on a 250,000 budget. You got to be realistic, because otherwise you're just setting yourself up for having the bank to come back and take that house away from you. Be realistic. It's always okay to upgrade, but start where you are. Start with that $250,000, that $300,000 home, and then you could always upgrade if you so desire. But be realistic about what the kind of house that you're trying to get. And it's the same thing if you were trying to buy a vehicle. Before you start looking at the Audi, you may want to look at a Honda or something, and then work your way up. So make sure that your goals are realistic, they are measurable, they're achievable, they are specific, and they are timely. And of course, if you would like support with your budgeting and savings goal, of course, here us at Out in the Fields, we would be more than happy. I would be more than happy to sit down with you to assess your budget, your spending, your finances, just to help you to see where you are, and to make it more clear how likely whatever the goal that you set is going to be for you to achieve it. Because we all know that proper planning is the best. You don't want to just go off the fly to just, oh, I'm going to buy a house tomorrow, I'm going to buy a car tomorrow. You want to plan for these things, okay? So with that being said, let's hear from Mr. Leroy Mckenzie Jr.
Lillian, I think we can go home. Joan covered everything. I think we're done.
Yes, he did.
But I mean, Joan, what you gave was just an excellent starting checklist for whether you are looking on the personal side of your finances or on the professional entrepreneurship side. You talked about the the personal side, and I'll talk about the business aspect of it. You want to start with the budget. What is your budget for your business? You want to know what I say, know your numbers. Know your numbers. You ever watch Shark Tank? And the presenters that come on, one of the first things that the sharks ask them is, what are your numbers? How much are you producing? What do your sales look like? They want to know those numbers because it gives them an idea of how much you're producing or how much you are, what your sales look like, how much of your particular product that you're selling, to know whether it's a viable product for them to be able to invest in. And you want to treat your business the same way in knowing your numbers, understanding your numbers that you have for your business, because whether you're buying commercial property, or even you may have as your business, you may want to buy residential property. So you need to know your numbers, because when you go to Lillian, the first thing she gonna ask you is, what's your numbers? She want to know what those numbers look like. you know and so you have to know those numbers backwards and forwards. It's your credit, whether it's your budget, whether your what your product is selling at. You have to know how much sales that you've had. You want to know those numbers, because those numbers are going to are going to give not only you an idea of what it is that you need, where you are, and what you need to do, but it's also going to give investors or bankers, financial planners, it's going to give them an idea of where you are and then where you want to go. And like Joan said, you want to know what your goals are, and you should have. I don't call them goals; I call them assignments. You should know what your assignments are for the numbers that you want to have, whether it's monthly, whether it's quarterly, semi-annually, and annually. You should be looking at those, and the way that you're able to understand what is going on. In 2020, there was a pandemic, so there were things that had an effect on your numbers that affected all of us. So you have to understand, okay, why were my sales down, or was why wasn't I able to sell this particular kind of product in this particular environment, because it was affected by certain things. One of the things that I noticed in my years working in the hospitality industry was it was cyclical. There were certain times of the year that we could see that there were ups and downs in our occupancy. There were certain times that things that happened. I'll give you an example. Just one year when we had that blizzard. This was, I think, maybe, I don't know if it was 2010 or back, but it was several years ago. We had this really big blizzard, and the sales for the hotel were enormous the first part of the year. Why? Because people they couldn't leave. The people that were there at the hotel, they stayed. So of course, our occupancy was higher, which meant we were making more money than we normally would have during that time of year, which is the slow season. So you have to understand what your numbers are, and even when it comes to the credit side of it, is knowing that number, and understand that if you're a growing company, or if you're on the personal side, if you're someone who's looking to upgrade your home, or if you're looking to purchase a new home, or if you're a real estate investor, which a lot of people some people are getting back into now with the way that the market is. You have to know that number, and where you need to be when it comes to your credit, so that you're able to maximize, one, the amount of house that you can afford. Like Joan said, you can maximize the amount of house that you can afford, but also that you can take advantage of the lowest rate, that the mortgage rate that may be that's out there. And I'm sure Lillian will talk more about that once she gets into it. But when you know those numbers and you understand them, then you're able to be what my mom called a conscious consumer. When you actually understand the things that you're buying, the things that you're purchasing, you understand what's going on. I've always been a numbers guy. I've always loved the intricacy of how money works, and the different things that affect how money works. Whether it's our gasoline prices, whether it's our food prices, and people gotta pay attention when you go to the market, when you go to the supermarket now. Pay attention to the prices of food now. because that trust me, you don't get as much you don't get as much food for your dollar as you used to. Why? Because of the pandemic last year, and things aren't as readily available. So of course that price is going to go up. So those kinds of things can affect your number. And also when you as a as an individual or even as a business person, when it comes to when it comes to your when it comes to your credit, you also want to just pay attention to, and I say this at least once a year, you should get a copy of your credit and your credit score. And there's a charge for your credit score. You can get your credit report free, but there's a charge for your credit score. So know that you have to understand that there's a difference in that. You should at least once a year, and this is for everyone across the board, that you should get a copy of your credit report. Now you don't have to do your credit score every year, but at least your credit report, so that you can see the things that are on your credit report and the things that may have gotten on there for some reason that shouldn't have been on there. So if you do it at least once a year, you can kind of know what's on there. And then when you go to buy that house that you're looking for, buy that car that you're looking for, you already have an idea of what's on your credit report already, and that there's no surprises and everything like that. And it'll give you a step up on, if there is something on there, being able to work to either pay it off or to be able to get it removed if it's on there in error. So those are the things that that we work that I work with my company. We work with you with your credit, being able to get you to where you need to be, so that you have that what we say 700 or above credit score, so that you're able to have at least the beginning of the amount of house that you can afford, or car that you can afford, or even the business residential property that you might want to have, and even with your business, how to make sure and ensure that your business is in good standing. So that would be my couple of points to be able to start off with, John.
Okay, awesome. And before I bring Lillian on next, thanks those who are watching. Thank you, Fiona, for tuning in. And again, it's normally four of us, but Stacy, who's a real estate agent and investor, wasn't able to join us tonight. So her company is MSA and Associates. Okay, and if you're looking to purchase, you can always contact her, and her telephone number is 301-532-2346. And again, it's MSA and Associates out of Brandywine, Maryland at 301-532-2346. I got to represent Stacy tonight because she's not here. So Lillian, take it away.
Absolutely. Well, Leroy and Joan, you've almost made it so easy for me, because both of the things and the tips and the wonderful suggestions are exactly what I am going to segue and expand on. Tonight, I'm going to talk about the benefits of refinancing, what it is, why a refinance, what type of refinance loans they are, and do you need income to qualify for refinancing. So refinancing has been all the rage since 2020. We are historically at all-time interest rates, and rates still stand today. Rates are low enough for the average person, whether you refinance or bought your house 1 or 2 years ago. And we're going to talk about the nuts and bolts that I think you'll be interested in hearing about refinancing. So we're going to start first with, you own your home. So you own your home and you want that home. It's not just a house, it's your home. But you also want to have that home work for you, because it's an investment. Homes appreciate every year. We always have equity. Equity is the difference between what you owe and what your market value is. We're in a market in which our equities are increasing, and that's excellent. So with that in mind, when you own your home, you want to know why and when to refinance. You'll have many life situations that you already know. Well, refinancing is basically getting a new loan and paying off the loan that you currently have. And for most people, it's the original mortgage that you had when you bought your house. You do not have to be a first-time home buyer to refinance. You can own your home for 2-3 years or longer. You can refinance investment properties, second home or vacation homes, or your owner-occupied home. So we're going to talk about the benefits or why to refinance, and I hope some of them will be informative and trigger, if you haven't already refinanced, to look into it, because you want to take advantage of rates being as low as they are now. So you may want to refinance to lower your current rate, the rate that of which you purchased the house. You want to reduce it and take advantage of the historical rates now. You may want to lower your monthly payment. You may want to shorten your term on your loan. For example, the average person buying a home, they do a loan for 30 years. Well, after you've owned your home, say at least 10 years or more, you may want to consider reducing your 30-year term loan to a 15-year loan. And what that does, the benefit is that you'll have your house paid off quicker. Another reason for refinancing, which most people know, is to obtain cash out. When you refinance for cash out, you basically can use those funds for any reason that you see fit. Again, you're going to refinance the current mortgage you have, and you're going to use the combination of equity that you have in a loan, in a home, and then you're going to use that cash out. It may be for home improvement. It may be to pay for continued education for yourself or your children. It may be to upgrade something in your home. It could be for any reason. The reason as to why you may tap the cash out and do a cash out refinance is something you can decide on how you may want to do that. And then another benefit of that is a personal loan may be amortized. That means the term of the loan. A personal loan may be for 5 or 10 years. Whereas when you refinance for a mortgage or on a mortgage for your home, it's amortized over a period of 30 years. So plus it can be a tax write-off. So those are the benefits of refinancing your home, your mortgage, as opposed to doing a personal loan, which doesn't have that tax advantage. The other important uh, feature about refinancing is when you buy a home, the average person may put down 3 or 5%. Most first-time home buyers are going to put down either 3% down payment, or they may put down 3.5%. In both of those instances, you'll have to include in your mortgage, in your monthly payment, mortgage insurance. That is required until your house has reached an equity of at least 80%. Once you have 80% value in your home, then you can drop mortgage insurance. You may want to consolidate your loan, to consolidate it for if you have a first and a second. Not so popular these days, but what is very popular these days for first-time home buyers is they may have qualified to buy their home using a down payment or closing cost assistance program. Most of those programs will assist a person to getting into a home, taking advantage of state and federal programs, but they are what we call silent seconds. So your first mortgage is in first trust position. When in a lot of the programs that assist you with getting in homes, you may have to pay back when you sell the home. So you have a first trust, and for those who take advantage of down payment closing cost assistance, that's a second trust. You do not make monthly payments on that. You do not, it is a zero interest, but if you sell your home, or should you want to access cash, then you may need to refinance both of them in order to access that cash. Everyone is different. I look forward to speaking with you individually because everybody's situation is different. But those are some of the reasons as to why you may want to refinance. But that's not all. We're also going to talk about the kinds of loans that they are, and we're going to talk about if you need income. So the type of loan that you purchased may be different than the kind of loan that you refinance. But one of the most popular loan types are conventional. A conventional loan is a loan that is not backed by a government agency. Those government agencies are FHA, also known as HUD, or VA, Veterans Administration. So conventional loans are sponsored by an entity. It's a government-sponsored entity, and conventional loans go by the name of Fannie Mae or Freddie Mac. You may have heard of that. And they are loans that we call conforming. They follow within a certain range for financing. So we also have government loans. As I mentioned before, we have FHA, sponsored by HUD, and we have VA. Those two types of refinances are called streamline or full doc. A streamlined FHA and a VA loan is basically it has limited docs, meaning when you bought your home, we asked you for tons of documents. We asked you for your W-2s, we asked you for your tax returns, bank statements. You had to update your documents. If you went into 1 month, we needed the previous month. So those are documents that are necessary when you purchase your home. For the person who has a FHA or VA loan, it's streamlined, meaning it's limited docs. We don't need a full credit report. We only request a credit report based on your mortgage history. That's one way why it's streamlined. The other way is that we don't have to verify your income. And those two loan types do not require an appraisal. So that's called a streamlined FHA or VA, if that is the loan type that you had when you purchased your house. And the very third feature that I'd like to go over is, do you need income to refinance, right? You think, yes, obviously, if I'm doing a mortgage, I'm going to need income. Actually, if you are streamlining, you do not need income to qualify for the FHA and VA loan. You do not qualify you on income. We qualify you on your credit score. We do look at your credit score. We look at your mortgage history, but FHA and VA make it possible for you to reduce your current interest rate, reducing the interest rate only for a streamline. Should you decide that you want to pull cash out or use your equity, that's what we call a full doc loan. That is when we need current W-2s, pay stubs, we verify your income, we do an appraisal. So the kind of loan that you have and the recommendation for the kind of refinance that you're able to do has to do with the type of loan that you currently have. You can go from a government loan, an FHA VA loan, to a conventional. As a matter of fact, that's one of the things that I certainly extend an option to you to eliminate mortgage insurance. Mortgage insurance can be a limit for FHA loan is for the life of the loan. But if you go to conventional and you've reached 80% equity in a house, then you eliminate mortgage insurance. So if you do a FHA VA streamline, we don't qualify you on income. If you do a conventional refinance or conventional cash out, that is a full doc loan. So you have several options. When I'm speaking with you one-on-one, my biggest focus is I'm able to assess what type of loan is best for you. I'm going to ask you, are you interested in paying off your mortgage sooner? There are things that you can do, that you can make extra payments, and that you could make a 30-year term loan and pay it off within 15, 20 years. So we're going to talk about that. We're going to talk about if you need cash, and if so, what equity level you need in your house. Leroy talked about, and Joan talked about the benefit of a budget. So you're going to continue the process of budgeting throughout the life of the loan, but there are times when you can have the equity in the house help you to reach your goal, as I said, to consolidate, pull cash out to pay for education. You may want to buy an investment property. So we want to see if your home is working for you.
Okay, awesome. So, my next set of information that I would want to share with you tonight, I shared regarding the basic financial literacy, you know, the budgeting, the savings, and all that. So now I would like to talk with you about my property management service. So if you own a property, if you're a property owner in Maryland, I need for you to ask yourself these three questions. Do I have time to manage the property? Do I have the patience to deal with the client, with the tenants? How fast can I respond to an emergency? So again, you need to ask yourself those questions. And so therefore, if after asking yourself those questions, you determine that you need a reliable property management company in Maryland, then look no further. Please contact us at Out in the Fields LLC, and we will help you with your property management needs. You know, so this also includes if you have a vacant rental property, you know, that's you losing money every day while the property sits vacant. So we can assist you with advertising, background checks, and everything that you would need to get your home, you know, utilized, rented, you know, so that, you know, you stop leaving money on the table. Of course, a rental property is a very vast investment. We all know that, right? So if you hire us, Out in the Fields real estate consulting firm, we will be able to help you to have that peace of mind knowing that your investment will be profitable. We monitor your property to make sure that it remains in great condition and repairs are done as needed. We also help to look over your property. If it's a property that it's only the land, you know, we help to watch over it to make sure that there's no squatting or vandalism, and to make sure that anything that needs to be done to the property get done in a timely manner. Okay. And so you might ask, what distinguishes us from the other property management companies in Maryland? I can't speak for them, but I can speak for Out in the Fields. Okay. By working with us, we have two goals in mind. One, to professionally and fairly price your home, making sure that you are not leaving money on the table by undercharging the tenants. And two, to ensure that your tenants are not overcharged. We use property marketing data in the surrounding area and the location, and we find the best fit for your property in terms of pricing, tenants, and all the good stuff. So again, if you're looking for property management services in Maryland, please contact us at outinthefieldslllc.com. So, Mr. Leroy, do you have another point you want to drive home for tonight? You're muted.
There we go. I know I always be like, all right, I'm gonna remember to unmute myself. But I'm gonna jump on the business consulting side. For those entrepreneurs that may be watching or viewing this broadcast tonight, let's talk about or whether you're an aspiring entrepreneur. One of the aspects of JNF Enterprise, and I didn't even say that before, JNF Enterprises, which is my company, what we do is we want to equip you with the tools that you need in order to be able to have a successful business. And one of the things that we have or that we offer as one of the products is our entrepreneur kit. And what the entrepreneur kit does is it gives you different tools that you'll need in order to be able to want to have a clear understanding of your particular industry, your business itself, and then also your competition and those things, because you want to be aware and knowledgeable of not just your business, but you also want to be aware of what's going on in your particular industry. And you also want to know who your competition is and what they may be kind of doing. So that's what we include in the entrepreneur kit. We talk about the different entities to be able to understand what an S corporation is versus an LLC, what an LLC is versus a sole proprietor. We give you a sample business plan. We give you a sample marketing plan. I actually do a branding strategy with entrepreneurs so that they have a clear strategy about how they want to grow their business and their particular brand, because you want people to think of three certain things when it comes to your brand. Those three foundational things that no matter what it is, people will think about when they think of your particular business. So we deal with that as well when it comes to preparing the entrepreneur, but then also sitting down and going and developing a business plan. There's nothing more important than having a business plan, because if you don't have a business plan, then I'm not going to say you won't be successful, but you increase your ability to be able to be successful by having a business plan. And you can't go see Lillian without having a business plan. I promise you. She's not gonna let you walk in there and you say you don't have a business plan. That's not gonna happen. It just doesn't happen. So you're gonna have to be able to put a business plan together, which is what we can assist you to be able to do, so that you have the ability to not only start a business. And that's been my thing ever since I've had my business. Was there's plenty of books and there's plenty of things out here that can show you how to start a business, but what are those things that you need to do or need to have in order to be able to keep the doors open, keep your business going? Because most businesses, over 50-60% of businesses fail within the first year, and then it gets higher, honestly, as you get into that second, third, fourth, and fifth year. So you want to put yourself in the best position to be able to have a successful business. And that's what we sit down and we talk with you about: putting that strategy together, putting the systems in place. And that's another thing: having the right systems in place in order for you to be able to be successful, whether it's a successful sales system, whether it's a successful um, production system, whether it's successful customer service system. How do you deal with your customers? What process do you have in place to be able to deal with your customers? And the more systems that you have in place, the more that your investors will be able to understand and see the vision that you have, and then also how you're going to be able to give them their return on their investment, which is what they're looking for. And when you have those things mapped out, when you have those things for them to be able to readily see and be able to look at, and to be able to be able to review, you give them a better idea of how you're going to go about being successful, especially in the time that we're in right now. People are really getting back to either opening up their businesses, or you have a lot of people that are starting their businesses, that have started their businesses right out of their homes. So you want to have those foundational pieces in place so that you are able to have I look at it these three things where you're actually able to maximize your productivity, you're creating a healthy work environment, and then you're also increasing your bottom line. If you have those three structures in place with your business, you will more than likely, I would say 8, 9, almost 10 times out of 10, you will be successful. If you look at the most successful companies, that have gone on to grow and to be as big as they are, you will see that they have those three things in common. They have a healthy work environment, they maximize their productivity, and then and by doing those first two, they increase their bottom line, and they strategically increase their bottom line, understanding that they have a group program in place so that they don't grow too fast, so that they don't get overwhelmed and they wind up not being able to meet the demands of their particular customers or clients, or they don't grow too slow where they get behind in their particular industry and they get left behind with the things that are going on in their industry, and they wind up having to close. So I think if you think in terms of that aspect of your business, which we can assist you to be able to do so that you have those plans, whether you have like I mentioned before, it's crucial, and I'll keep saying it, the monthly plan, your quarterly plan, your semi-annual plan, and your annual plan. You should be looking at those three aspects or those four aspects of your company, as well as your personal life as well each year. You want to be looking at it. You don't necessarily have to look at your numbers, or you should know your numbers monthly, but you want to make sure that on a quarterly basis, you know what's going on with your products and services. You want to know at the end of the year, you want to take a review of all your products or services, what things worked, what things didn't work, and you use that to be able to budget and forecast for your next year, 5 years. As my mentor, he tells us, we think in terms of decades. I don't think in terms of years. We think in terms of decades. How are we going to look? Well, how do we want to look by the end of this 2029, which it would be the end of this decade? What does our business look like at the end of 20 or by 2029? Where do we want to be? Because everything that we're doing now works us towards where we want to be in 2029 in order to be able to dominate the decade, as he says. We dominate the decade. But when you have those structures in place, you're able to be a successful entrepreneur. You're able to be a successful, just personal, in your personal life, be able to do the things that you want to be able to do. Joan talked about the vacation that you want to take. Well, if you know your numbers and you're able to do what it is that you want to do on the professional side, it will allow you to be able to have the comfort of being able to travel, to be able to do some of those things, spend time with your family, do those things that you may want to do on the other side. But you got to do the work though too. So.
Okay, awesome. So again, let me use this time to acknowledge, in her absence, Mrs. Stacy McClennan, who is one of the four of us that's normally on here hosting this program once a month, who was unable to be present with us this evening. So again, Stacy McClennan, she's a real estate agent and an investor, and her company is MSA and Associates LLC. And you can reach her at msaassociates.net. Again, it's msaassociates.net, or you can call her at 301-532-2346 for your real estate and investing needs. That's Ms. Stacey McClennan, and I'm sure she will be with us next month when we host our other session. So again, if you're just tuning in, this segment is called Ask the Experts, and this is brought to you once a month, the second Monday of the month. So I just want to wrap up with some of the other services that my company Out in the Fields offer. We also offer wholesaling. And believe it or not, as you all know, wholesaling is closely aligned with real estate. But as you could see, there is no need for competition. There is no need for not collaborating, because we all have our own specific lane. So yes, we have Stacy, who is a real estate agent and investor, but at the same time, I'm also into wholesaling. But that's what collaboration is about, because what is for you will be for you, right? Yeah. So one of the services, again, is wholesaling. We help you to sell your home. Because for me, I take a different approach with my wholesaling though. So for me, I'm mindful that sometimes as homeowners, we may hit a rough patch, and the first thing that come to mind would be to sell your home. And I know how hard it is to purchase a home as a homeowner. So I hate to see anyone lose their home if they really don't want to lose it. Okay. So this is how I operate. I present to you other options, whether it's options and resources, introduce you to refinancing, debt management coaching, whatever it is that you would need to do to help you to keep that home. Okay. But if at the end of the day, you just want to straight sell it, you don't want to deal with it anymore for whatever reason, then that's when, I put on my wholesaling hat and I help you to sell that home. But my first thing is not to cheer you on. Yes, sell your house, sell your house. No, I provide some kind of coaching and resources. And then at the end of the day, if you just want to sell, I got you covered as well, okay? Also at Out in the Fields LLC, we have a cleaning component where we offer affordable, quality, professional cleaning services for pre-sale and pre-rental homes. Again, that's one of the services. And our latest service is our gifting service, where we offer gifting service for your clients. You can offer these to your clients at closing, and this is an additional way to say thank you to them and to welcome them to their new home. So at Out in the Fields LLC, there's an array of services that you can get through us. And again, it's outinthefieldslllc.com. So I'm going to close it out with Miss Lillian, and she will tell us again about the upcoming home buyers seminar that you all are invited to, and we're going to ask you to please share the information. And that flyer is on my main page. So please check it out, or you could check it out on the We Global community. And so this way you can invite your friends, your families, your coworkers who may be interested in purchasing a home, but just need some information in doing so. So Miss Lillian, please take us out.
Yes, please join us on April the 3rd from 11 to 12:15, and we're going to feature and review all of the steps necessary for you to own your home, be it a first time move up vacation home. We're going to go over the steps that are necessary to tell you which loans you qualify for, the process, the down payment and grant program monies that are out there that can supplement for those who may not have all of their closing costs. There are programs that are out there sponsored by the state as well as federal that I'd love to tell you about. A lot of it is free money. We want you to use it. So don't let not having all of your funds be the reason why you may postpone owning a home. The time is now because rates are so low. So we're going to address the process from the perspective of myself as a loan officer, from a professional real estate, and from a credit point of view, to answer all your questions about home ownership, the steps, the process, and how to make you a homeowner in under 6 months. So we're hoping that we see you. Come join us. We're looking forward to meeting you there.
Okay, awesome. So Mr. Leroy, can you please leave our viewers with one quick credit tip? Because this is a once a month program. They won't see our lovely faces until next month. So please leave with them one quick tip related to credit that they can use until we meet again.
Sure. Absolutely. I'll just, like I stated earlier, these 3 words: know your numbers. Know what your credit score is. Take the time to get a copy of your credit score. This is the beginning of the year, so this would be a good time to get a copy of your credit report. Get a copy of your credit report in order to be able to see what may be on there, that may be on there in error, or that may be on there that can be taken care of, and you can set out a strategy and a plan to be able to work it off, or to be able to remove it from your credit report. So that would be my quick tip: know your numbers.
Okay, awesome. So let me use this time to thank all those who are watching live, and definitely those who will be watching the replay. Thank you, whether you watch from Facebook or whether you over there in YouTube. Thank you so much for tuning in to this month's Ask the Experts on the Joan Henry Show. So join us, mark your calendar. We'll be back on the second Monday of April with more on Ask the Experts. Okay, we thank you so much for tuning in. And I have been your host, Jamaican Joan. And until next time, please take care and make this $1 million day.